Guys, welcome to my channel. My name is Peter from Sun Insurance and Logistics. And today, thank you for tuning in. If you are a new man and you are looking at this channel for your first time, please do uh, look at my content. And if you like it, share. And don't forget to subscribe before you exit. You know, I usually do insurance and I meet people every day. And I know a little bit about trucking business. And I've been having people meeting me and asking me and what happens at the end of the year after you have worked for quite some time. The law here in the United States mandates everybody to file the taxes at the end of the year. For example, in 2023, you have to file the taxes for the financial year 2022. So I've been having a lot of questions, people asking me, how do we do the taxes? And that's the reason why it's a season time. You need to have your calculator and calculate all your expenses, which gonna be used to your tax accountant, so you can have a tax break, which can be written off on your taxes. So today, the purpose of doing this video is to let you know what are some of the things which are allowed to be written off on your taxes. First of all, I'm not a tax expert. I'm not an accountant, but I know a little bit. So the content you are looking at is entirely my opinion, and I've done some research from the internet, and that's what. But you have to consult with your accountant in order uh, to get a full explanation. So if you are a truck driver and you live in the U.S., you are required by the law to file your taxes. And today I'm going to go over some of the things which you need to put together, so when you go see your accountant, they can use that information to give you a break. And let us look at some of the deductions which you can use. So the first one, which can give you a break, is the insurance premiums. For example, I sell insurance for the truckers. You pay premium for the whole year. If you have a box truck and you are paying $700 a month for the 12 months, so you have to tell your accountant to report this, and they can be itemized so that you can get a tax break. So the insurance premiums, you can also deduct the cost of related business insurance expenses, and especially the commercial liability and auto liability, the property damage insurance, and even business interruption, or if your vehicle was in an accident and you were supposed to make some money and now you have no way, so you have to discuss with your accountant and see if you are out for, let's say, 3 months. If every month you were supposed to make $3,000 and now 3 months that's about $9,000. So you have to uh, figure out that your tax accountant will figure out that. The second is the association dues. If you are in a union or an association, trucking association, and you do pay membership fee, let's say every month, and those ones they can be reported and they can be deducted from your taxes which you owe This can be directly related to a truck driver, and that's one thing. The cell phone plans differ because the truck drivers, since they are over the road, they change and they have various plans. So you have to discuss with your accountant and see what plans you have and how much you've been paying, and always keep your bill, the receipts. All these things we are talking about, you have to show proof in case you are audited. And if the IRS writes you a letter and say you reported this, we would like to come and audit you. So to be on the safe side, make sure you keep the receipts uh, as a proof. The personal electronic devices, these devices like the GPS, which you guys are using. If you have a laptop, you are using to search for the loads. And if you have a tablet or any other electronic devices, so long as you are using it for work, just only for work, it's allowed. If you use it in both business and personal reasons, you can deduct the portion related to work only and report it with your accountant. When it comes to education, if you pay for truck driver school, or if you go to train and get a CDL, you have to come up with the fee or the money you paid in order to acquire that license. You can deduct those expenses and other educational expenses that may be tax deductible, as long as it is directly related to your driving career. As a self-employed trucker, this might include businesses courses to help you learn better and manage a small business. If you go to a class or you take a course online, so you can understand the structure of the business, how to run the business, how to manage the business, that one is allowed. You can report that one and it can be written off. The meal expenses for truck drivers. You can deduct meal drivers if you are away from home, only if you are away from home over the road, but not the meals you eat at your home. And if you are away from home long enough to need a break of sleep or rest, if you drive locally, you probably don't qualify for that, because you drive and come at home and eat from home. Drivers who travel regionally or long haul, they can probably do that and include your meals um, in the things which need to be itemized. Drivers who are subject to hours of service regulations can claim up to 80% and of meal expenses purchased on the road. If you're at a truck stop, you buy a sandwich for your lunch, for your dinner, and drink coffee, tea for your breakfast, and always keep receipts. Show the receipts to your accountant, and that one should be able to help you do that. The medical expenses. As a condition of employment, drivers may be required to get a regular medical exams, and you can deduct any out-of-pocket costs or the deductibles which you pay or the co-payments which you do. For example, I know that some of the truck drivers, they go before they are hired, they are asked to go for a drug test, for a DOT medical card, and since you go there, the center don't do it for free. You pay a certain amount of fee, and that's when you get the receipts. Those are the receipts you need to keep and mention to your tax accountant. And also the clothing, business clothing. These are not personal clothing, the business clothing. For example, if you buy gloves during the winter, it's cold. You buy a hat, you buy heavy jackets, boots, you buy jeans. Those are counted as business clothing. Any specialized clothing or safety gear required for your job, like company logo, shirt, the back brace, steel toes, boots, or safety goggles can be used as deductible. Regular everyday clothing does not qualify. So it has to be the clothes basically related to work. The dispatch fee. If you pay a dispatch fee for the loads, you can claim them as a business expenses. Just make sure to track them and keep all the invoices and receipts throughout the year. That's the only way you can prove. Otherwise, if you are audited and you don't have it, then you might be in trouble. And the licensing fees, if your state or local government requires you to get a business license for your business, you can deduct that cost. I live in Wisconsin. I know when you form a company with the LLC company with the financial institutions, you pay a fee. And to process that, you have to keep your receipt. Or when you do like annual renewal, you have to keep the receipts to prove like you have an expense to do that. So you can also deduct the cost of your CDL license or another license is required to conduct your business. It's allowed so long as you have the receipts. The load expenses. These are the expenses which include any specialized items you buy to help safety carry your loads, like the load bars, the straps, the blankets, the locks, and even the wide load flags. If you are transporting a wide load and you need to put some flags to warn other motorists that you are carrying, oversized loads, those ones are allowed. You can claim the expenses. And the tools and equipment. If you are like most other truckers, you probably call a toolkit in your truck. Things like hammers, wrenches, uh, pliers, uh, tire irons, chains, and even electrical tape are all tax deductible. In other words, everything you use in the vehicle, the log books, uh, tape measure, everything you use, the GPS, I've mentioned it, that one is allowed. You can, the phone charger you use, the car charger you use, that one is allowed. You can use it as an expense. The fuel and travel. So the fuel expenses, if you have a fuel card, let's say you have it from Fleet One. I used to have one from Fleet One. And they keep track of every truck stop you go. You go to Pilot, Fran, Chai, you go to TA, you pump some gas, it keeps you and they send you a bill which you have to pay every month depending on your agreement with that kind of a fuel company. So that one you can do the calculation throughout the year and then you can use it as an expense. You can also claim related travel expenses such as tolls. I know a lot of over the road, you go through state lines. For example, in Pennsylvania, Ohio, Indiana, Illinois, there's a lot of tolls you have to pay. So if you have an iPass, that's an expense. So you have to uh, tell your tax accountant that you need to claim that. So the tolls, the hotel costs, if you go to an hotel and you spend there, and the parking fees, as long as they are incurred while you are on the job. that one is allowed. The office expenses. As a self-employed tracker, you are likely to incur some traditional office expenses. If you are in an office, if you work from home or you rent a place, you pay rent every month, and you are running your business. This may include things like postage, photocopying. You have a printer, you want to copy something. You have fax, accounting software you are using for your business. Calculators. If you have a calculator like this, you have 3 of them. And even the pen you use, if you have a pen you use for writing, which I'm sure everybody does, that one you need to report as an expense. And now when we come to a major expenses, it's a truck repair and maintenance. Every business person who has a truck in the fleet, you have to service. When it breaks down, you have to take it for repair. And all the maintenance which is required. If you are using a dealer or a mechanic you trust, those ones need to be reported. You have receipts. And these are non-personal use vehicles. They have to be business-related vehicles, and you can deduct up to 100% of all the costs for the truck repair and everything. You can do 100% is allowed. And the vehicle expenses, they also include the depreciation as well as loan interest. If you financed this vehicle and when you purchased it, or while some industries offer a standard mileage deduction, in the trucking industry, you must deduct your actual costs. So if you are paying or if you lease and you are using the vehicle in doing the business, you don't own it, then you need to deduct the leasing expenses. So basically what I was touching today, there are so many expenses, but these are examples. I can't do all of them because of the time. And but basically those are the common expenses. And if you are not sure, you are doubting an expenses which you incurred and you don't know if it's supposed to be reported, leave me a comment under this video, and I should be able to respond in a timely manner. But basically, that's what you are supposed to do. And remember, it is a tax season. And if you haven't filed your taxes, make sure you talk to whoever you are running business under. If you are being dispatched under a company or you are leasing your truck to another carrier, make sure you get your 1099 forms, which they are required to send by law by the end of February. I'm very sure most of you have received them. And talk to these brokers, and so they can send you everything. Uh, and there are some brokers who don't send the 1099s, so that one you have to figure out your math on how to get the total amount of money for the brokers who don't give 1099s. I know the companies like Panther, Premium Logistics, they don't send out if you work with them. And there's so many other companies there who don't send out the 1099s. But if they do, just make sure you include all of them when you go see your accountant to help you make the taxes. Guys, I got to go, and that's all I have for today about the taxes. And by the way, if you are new to this industry, the taxes are running all the way to April. I believe it's around April 18th. Used to be April 15th, but I think you have some few days extra to make sure that your taxes are in. So let me know, guys, what you think about this video, and I hope this helps someone out there, and hope I'll see you in the next video. Bye bye for now, guys.